Cybersecurity firm Checkpoint Software just out with quarterly results. The company earned $2.25 a share. That came on revenue of $635 million, both of those in line with expectations. And joining us right now to discuss the results, cybersecurity and AI, is Checkpoint Software Technology CEO Gil Shwed. Gil, thank you for being with us this morning. Let's talk a little bit about the quarter. Where are you seeing the most demand?
All over. I think last quarter, actually, U.S. markets were relatively strong. We've seen a lot of demand in the Americas. But customers need all types of cybersecurity. For example, our email security is growing very fast, and I think for good reasons.
Back in September, you released a report that cybersecurity attacks on U.S. utilities were actually up 70% this year. What are we seeing, and can you compare this to anything we've seen in the past? Is this just far more activity than you've ever seen?
Yes, the growth is very high. The growth in America is about 56-57% growth in cyber attack year over year, and that's something that should alert all of us.
And those attacks that are coming in, are they more complicated? We've always known that this is a bit of a cat and mouse game where we put up better cybersecurity, the bad guys look for bigger ways around it. Who's doing this cyber attacking? Is it nation states, and are they getting better at what they do?
So absolutely. The main thing that should frighten us is with the attacks that we are seeing today are what we call fifth generation or Gen 5 cyber attacks. They are attacks that are super sophisticated. They get into an organization, they map the organization, they take over from the inside, and boom, then they do the ransomware. We see that almost 60% of the ransomware cases around the world are in America, which shows that it's a big target. It's a combination of criminal organization, but we do see a lot of activities that are state-sponsored from all over the world targeting the U.S.
You know, earlier this year, it was a huge issue back in July when CrowdStrike had this self-inflicted wound. It was a problem with their own programmers that shut down systems everywhere. Maybe nowhere felt it more deeply than Delta, which is now turning around and suing CrowdStrike for it. What's your take on that situation? What happened? What went wrong? Who's to blame?
I think it's a very unfortunate situation, and no company wants to be like that when it shuts down huge parts of the world because of a software bug. Unfortunately, it can happen to any type of software, not just cybersecurity software. And it shows the vulnerability, or not the vulnerability, it shows the dependency that we have in software in general and in technology. And one bug in technology, and in the case of CrowdStrike, it was a bug. What hackers are doing are trying to create their own attacks and create these bugs, and they know how to do it, and it's a real risk, and it should give us all the reasons to deploy better cybersecurity, because these attacks can have devastating results like we've seen with CrowdStrike.
What are you all doing with AI, and are there ways to make these protections more efficient, more effective?
AI is a double-edged sword here. On one end, it enabled the attackers to create more sophisticated attacks. It enabled people that with less technical expertise to create cyber attacks. Just as we know that AI can generate text, AI can also generate computer code, and that computer code can also be malicious. On the same time, AI is a huge asset for us, the defenders. AI can enable us to spot patterns that otherwise cannot be spotted. It can enable us to configure systems faster. It can enable us to do all sorts of things that today, and by the way, there's a huge shortage on manpower, on cyber. AI can augment some of that with automated bots that can do a lot of routine job. But AI is amazing at analyzing big amounts of data, finding wrong patterns, and so on. So I think AI is both a big risk, but also a huge opportunity for us in the cybersecurity industry.
Gil, we just reported your earnings as you were coming on. We characterized it as in line with expectations. I'm looking at your stock. It's off 11% on this news. What is Wall Street seeing that it doesn't like?
I didn't see that yet. I don't know, but we were at the upper end of our projections. So I think we had, and all the financial metrics that I've seen and I've watched them very carefully are actually pretty good. It's definitely possible that investors have very high expectations from us, and that's a very valid thing. I think we should aim high.
Okay, again, so you're surprised as I am by this because I just was looking through your release as you were coming on. I didn't see anything that jumped out. There's nothing that would explain to you why this is down other than investors had higher expectations than even the estimates that the street had?
Our results were very, very good. Again, every financial metrics that I've checked was good in terms of cash flow and revenues and earnings and EPS. All the metrics that are important, I think, were very good financial metrics.